Surprise, surprise, surprise! Welcome to the first ever episode of Trading with Sense with yours truly, Kryptoni, Mr. Riseroni, where you could learn how to trade the financial markets, whether it's stocks, bonds, cryptocurrency, or binary options. Well, my channel is mainly focused on teaching people on how to trade this great wave in which they call the blockchain revolution, but it also caters to those people who wanted to learn how to trade the foreign exchange market and even stocks. So, if you're ready, let's get it on. By the way, I am speaking in English because I have an international audience and I just want to greet them today from Ireland, my fans in New Jersey, and then in Abu Dhabi, in UAE. There are people who's watching me from New Zealand, and also there are people who's watching me from Jensen. So if you want to watch this introduction in Tagalized version, I would make another video and I would put the link here so you could enjoy this in a more Filipino way. But for now, please forgive my accent because my accent is composed of three different accents, which is in neutral, American English, and sometimes I become full Aussie, and then sometimes I become an Indian. The point here is that I have to get my message across in a language that most people understand. I will be discussing the foundation of how the monetary system works in your trades. It's because not most people know or understand how this works. And I've learned technical analysis. Technical analysis is using charts to make a wise guess by using probabilities, by using mathematics, by using history to predict the future move of the market without understanding the fundamentals of how this system works. Since no system is perfect, it's really hard to cope up when your patterns did not work and you can't explain why. And what you do is you try to rationalize it with your own understanding and you become an expert in your own sense and then you fail. In my early career, as I meet people, the bankers, the real traders, those traders who trade on the floor, I met full-time traders, programmers. I got interviewed internationally. That's the only time that I understood that I really don't know a lot of things yet. There's something missing in me. And so I want to share this to you so you could have a perspective on what the financial market is all about before you even begin to invest your money in this financial system. I want to start by having a short game. This game is called What is the Value? All you need to do is determine the value of the things that I will show you in the next slides. Make a mental note as long as you really answer it. I'll give you 2 seconds for each slide. Here we go. What do you think is the value of this piece of object in front of you? Ready? One, two. Next picture, please. I give you a clue if you're having a hard time what this is. Some people call it the lawan. I don't know what that is. One, two. Next slide, please. This is a bit different. Ready? One, two. And lastly, and I hope you can determine the value of this thing. Ready? One, two. Alrighty. Before I reveal my answer, I want you to think about your answer. Maybe we all have different answers, but I'll give you the correct answer. That is the correct answer. The real value of these things is zero or nothing. All these things have no real value. Think about that for a second. All these things have no real value. So what have we seen in the previous slides? We've seen 1,000 peso bill, a 500 peso bill, a check, and a dollar bill. All of these things are just tokens based on a promise. The value of those things are determined by a promise and by your perception, which is the trust you give to it. Let's make an example. Yesterday, you went to the market, you pulled up your 500 peso bill, you gave it to the cashier, you gave it to the tindera in exchange for goods like meat, sugar, and you got something, a commodity, which has real value in exchange for a piece of paper. And because it happened yesterday, today you have another 500 peso bill and you are banking or you are trusting that because of what happened yesterday, this 500 peso bill has the same value today, and all it was a trust issue. You trust that this paper can be exchanged for good. But what makes it valuable to the tindera or to the store owner? It is because they are also banking on the promise by the government, by the bank, who says that this paper is good as money, where in reality it is just a piece of paper printed with numbers with the promise of the state. But in reality, it has no intrinsic value. And why am I discussing this? Because the system that we are in, or the system that you are about to invest in, is a corrupt system. Let us look what has real value. What is currency and what is money? What has value? Gold and silver has value. And they were, since the beginning of time, the first things to be used as money, not paper, gold, and silver. Why? They have intrinsic value. Intrinsic is, it just means that by just looking at them, face value, you know it's precious. By just looking at them, you know this is worth something. The gold, if you have a gold coin today and your country is accepting that gold, and then one day your country stopped accepting that gold coin, you could melt your gold coin and mint it into another form of money. It doesn't lose its value. Gold and silver has value, or they are real money. Another example is this. After the First World War, I think, the dollar is backed up by gold. What do you mean by that? The money or the paper bill that has print like this is a certificate for you to be able to redeem real gold in the bank. I don't know if you could read it, but it says in gold coin payable to the bearer on demand. $20. This is also legal tender. When you go to the bank and you give this, you would really have gold coins in exchange for this. Same with the old dollar bill. It's a silver certificate where it says, there you go. It says, these certifies that there is on the deposit of the treasury. So there is something deposited on the treasury that if you exchange this $1 in silver payable to the bearer on demand. That's interesting. But why is it interesting? Because most of the money nowadays are like this. It says on the top, Federal Reserve. Note, the Federal Reserve is the Central Bank of America. In our context, the BSP is our central bank or our Federal Reserve. They are the ones who are assigned or who has the power to print paper like these. But it doesn't say anywhere in this bill that you can exchange it for gold in the treasury. Even if you look at your 500 peso bill or 1000 peso bill or any bill you have right now, it doesn't say anything like that. This is the world we're living in today, where banks are just printing money. And why is it important in your trading career? Because the difference between currency and money. If you are going into the stock market or the foreign exchange market, what you're trading is not money. What you're trading is currency. Let that sink in for a moment. you're just trading or exchanging numbers. You are winning numbers or winning promises. Either you lose a promise or win a promise. So, what is a currency? A currency from the Middle English, it says here Quran. I don't know if that is the right pronunciation, but it just means in circulation or current. Current. It needs to move and to run, to flow, to be relevant. Meaning, your currency or the paper bill that you hold right now has no value unless it is moving. If you're buying goods for it, it has value. But if you store it and then war broke out or there's a zombie apocalypse, it has no real value because it's not moving. Like right now. If the markets are not open during quarantine, your money has no value. It's just a piece of paper. It's portable, durable, divisible, and fungible, which means interchangeable. You could exchange it for another currency or another piece of paper. It is a unit of measure or account. That's what it does. It's a unit of measure. It's just a medium of exchange. But it has no store of value like gold, silver, and cryptocurrency. Because cryptocurrency is good as money. Money is like currency, portable, durable, divisible, and fungible. But it has store value. You can store value in it. 100 grams of gold right now in this country is also worth 100 grams of gold in another country. If there is war, gold is still valuable. It's indestructible because that's a characteristic of wealth. You cannot destroy wealth. The gold we mined 5,000 years ago is still here on Earth, being traded today. Examples are gold, silver, precious metals, diamonds, commodity. What are commodities? Sugar. T blocks has been used as a currency, cryptocurrency. And money should be limited in supply. It should be rare. It has intrinsic value because it is rare. If it's not rare and you could easily produce it, it is not money. So I hope today you understood that you are going to be trading currency. You are going to be trading something that is not backed up by anything. Why is it important for you to know this thing? Fiat versus commodity. What you're trading, or the currency, or the stocks, are run by this. Fiat is any currency, okay, that is being printed today. That is just the meaning, the simple meaning of fiat. Compared to commodity money, which has real value, like the old dollar bill. How this system works is like this. This is very important. Knowing this will make you a wise trader in the future. You should know how money or how currency is created and how currency flows. Currency loses its value if it doesn't move. It should be current, it should be moving, it should be running. That's why governments like to make debts or loans. Debts are the primary driving force in moving an economy of a country. Here are the main characters of our monetary system story: the treasury, the central bank or the reserve, and the big banks. Maybe Chase, Bears and Stearns, JP Morgan Chase. So JP Morgan is Chase. Wells Fargo. These are the big banks. ADB. If you understand this system, it begins by the promise. It is started by these politicians. Currency is created because of these people. When they run for a position in a government, make a lot of promises. And they say they will build bridges, they will make hospitals, blah 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 blah, without them knowing how much money they will have. So they could please you. And then once this politician is elected into office, they order the treasury to issue an IOU or a bond. So bonds or T-bills are certificates issued by the Treasury so they could create currency. And they bid it to banks and sometimes people. It just says the government is asking the banks and the people loan me this amount of money that is payable in 10 or 30 years so that I could build what I promised you. You know who will pay that infrastructure eventually. And the treasury issues the bonds and the banks bid on the bonds so they could make a profit, or the big banks are the middlemen. They make profit by buying bonds from the treasury, and then here's what happens. Once they bought the bonds from the treasury, they deposit it to the central bank, making an interest out of it, a profit. And then the central bank issues a check. It's good as cash, and there you go, currency is created. As the banks get more currency, they buy more bonds to make more profit. And as they buy more bonds, they sell it back to the central bank to make more profit. And this is how banks make money primarily. So in this illustration, you would see that the big banks are the ones who are dictating the prices, who are the ones moving the prices, and who are the ones creating currency. So the same way, if you trade Forex, your biggest hurdle in succeeding in this industry are the banks. Because they are the ones who will surely make a profit out of that system. So if you don't know how they think, you would just lose money. So how about stocks? Here's what happens. Now, the banks have money and the treasury got the money from the banks and it gives it to the government. And now the government now builds the promise. It now builds bridges and infrastructure. It now creates systems like PhilHealth, funds other promises, and then now it drives employment because it needs people to make those things. Now the people get the currency as their salary, and now the GDP goes up and the stocks goes up. If you're trading stocks, it is affected by this system. That's how it gets affected. So if you don't know how this works, it will be hard for you to trade stock. But there is a backstory in this. So now the government tries to fulfill its promises to you, but the question is, with all the printed money out there, who pays the interest? Let's say the central bank printed 100,000 bills. So that's the current money in circulation. But if you make an interest, the money that will be used to pay that interest is not yet printed. 100,000 is the only money that is circulating right now. So what will the central bank do to pay the debt? They need to print more money. So they are creating money out of thin air. As you get your salary, this is what you do. You become a hero. What you do, or what most people do, is they line up to the bank to safe keep their money because they think the banks is a safe place for their money. No, no, no. It is not a safe place because when you give your money to the bank as a deposit, they loan your money or they lend your money to other people in which they make another interest from it without having any capital. Think about that. They make money out of your hard earned money. And who will pay the loan that the government took from the treasury? They will get it from your taxes. You will pay the loan of the government by working hard through your taxes. This is a great system, don't you think? That's why you're the hero. And I have here, this is from the website of the BSP or the Banco Central. It says here, listen to this, the Monetary Board, BSP, is composed of a monetary board. It is not a sole government property. It is composed of a monetary board. Think about that for a second. Its chairman is the BSP governor, with 5 full members from the private sector. I'll decode that for you. They are businessmen and they are banks. Okay? And 1 member from the cabinet. There are 4 people who are from the private sector and then 1 member from the government. Imagine what would happen. When you go to the website, you would see there that it says it controls the prices of things, not just the flow of currency, and they print money. In an article, it says here BSP is literally printing more money. They are suggesting that BSP prints more money. Printing money out of thin air, my gosh, is the central bank's most important power. So, what is the point of all this? I just want you to know that if you're going to enter the financial markets, there are people controlling the movement of the financial market. There are people who are manipulating prices, but they are doing it legally. And you would lose money if you don't understand this concept. So the only way for you to succeed in any trade is for you to think like the banks. It says here, without shame, printing money out of thin air. They're so rich that they print money out of thin air, not backed up by anything. If you do the math between the money in circulation right now and the reserve that the central bank has, it will not, level up. That's why there is inflation. If you don't understand what inflation is, you have observed this through time. The prices of things never goes back to the prices that they were. It just goes up and down, and that is the market. Like, let's make oil or gas, for example. The prices of oil always goes up, and they always say, hey, the supply is limited, but it's really not. What they're doing is because there is a surplus of the printed money in the economy, if those printed money are not consumed, it will be a loss for the government and it would be a loss for the banks because it's a surplus of printed paper. So what they do, they manipulate the prices and increase it so that they could catch up as a demand that will eat up the surplus. That's why we have an inflation. And the beneficiary of inflation are people like you and me. This is the reality. It's just how it is. This is just my point for this introduction. All those things that I mentioned before, the system is called a centralized system, wherein the banks are the middleman. If you are going to choose to trade Forex, which is fiat driven, you are going to trade in a centralized system. No matter what happens, the banks will be manipulating prices, the banks will be moving currencies. Same with the stock market. It is also driven by a centralized system. So this is one option for you. In these systems, you could still make money. You could still make great investment. But you just have to swallow up the reality that this is a centralized system. And there is another system in which I am beginning to venture into now, which is a decentralized system where there are no middlemen. That's where cryptocurrency or blockchain technology, Bitcoin, comes in. So, what is a decentralized system? That will be for another video, but just to give you a short example, in a centralized system, if you needed money right now, your money might be in a bank, or if you need to send money to someone, there is a thing called digital currency right now, right? Gcash, smart money, or PayPal, something like that. But since this is running in a centralized system, if you receive the number in your Gcash account, you need to transfer it into your bank account so you could eventually withdraw it into fiat and then eventually buy something in the market. What happens if the banks are closed or if Gcash is not functioning or the ATM is out of money? Then your financial future is a mess. That is a centralized system. That's how a centralized system works. Why I love or why I'm betting in this technology or in this promise is because a decentralized system is so efficient and it's really useful. This is the best time for you to invest in this if you're interested. Why? Like, if you have a family member who is overseas or in another country, let's say, and they want to send money to you, all they need to do is go to their phone, send you some cryptocurrency coins, and it goes directly to you. You don't need to wait for days. Wherein in a centralized system, you need to wait at least 1 month, 7 days, 1 month, just to transmit that amount of money. Because I'll just explain it in the next video. With the decentralized system, the money from your mom's cell phone in the United States goes directly to your phone. And if this is applied to our current Tindera right now, all you need to do is scan a QR code and then it goes to their wallet on their phone and then you get the commodity. You don't need an ATM. That is very efficient. And there are no fees. Or even if there are fees, it would be minimal. And this decentralized system is volatile because it is driven by volume and it is not manipulated by a central bank. That's why I like this. So, this is another option for you. So, in summary, you have two choices today. Either you trade in a decentralized asset class, which is cryptocurrency, or in a centralized asset class in which it's fiat driven, it's bank driven, and it works. I'm just giving you options on what you want to trade. I will make separate videos for cryptocurrency, for forex trading, and for binary options and for stock. If you like this, please help me make more videos by subscribing. Help me make this channel into 1,000 subscribers by the end of the month. And I would like to see you on the next video. But before that, if you want to understand basic economics, I will put the link of my friend who's a professor in Ateneo de Manila University. The best weapon that you could get right now is the best education in the financial industry. See you in my next video, and remember, if it's from Tony, it must be good. Bye bye.